Hey folks, Dan Frio here with your closing bell for November 21st, 2024. So rates, they were just stagnant again today, and I'm okay with that because of all the things going on around the world right now. The stability in these rates are pretty good. But if you're in equities right now or Bitcoin, you might be retiring soon. Look at the overall markets right now. We got basically a green across the board, and the VIX is also coming down. Look at the Dow Jones is up 400 points, S&P is up 0.5%. NASDAQ gave it all back, but it's up 6. We're across the board. We're up. Cryptocurrency is just shy of 100,000. Let's see if it hit it yet. 98,000. We got oil. I think oil's retreating as well. No, oil's at $70 a barrel. Oil jumps as Russia-Ukraine missiles exchange overweight U.S. crude stock. So that's going to play some havoc in the oil market right now. And then in the bond market, it's basically flat across the board as well. So what actually took place today? Well, let's get over to it. We actually have an interview with Compass CEO telling us the outlook that he has for 2025. And also Altos Research. If you're new to this, me or this platform, this is what we use to figure out what your home prices are doing. So let's get back to square one. Right through here, the last piece of the puzzle that we had so far today was a little bit of economic news down in here. And we saw existing home sales. They were actually pretty good. They were up. They were previously at a negative 1.3. They came in at a positive 3.4. But he gives us a little more context in the housing market. So let's listen to this. And then when we come back, I'm going to show you how interest rates reacted for today. And then I'm also going to show you a market survey or a market summary that we're going to put out every day as well. So let's get to this interview. It's pretty intriguing on what he thinks 2025 may bring. Take it away.
He joins us right here. Always good to have you, Robert. Are you feeling a little more optimistic? I mean, 7% has seemed to be a barrier in terms of real significant increases in ability of people to buy homes.
Look, I liked it better at 6% than 7%, but 7% is better than it was last year. Last year, we were at 8.2%. And so I'm feeling positive. We just saw today that existing home sales in October were up 2.9% year over year, the first annual increase in over 3 years. However, the average transaction volume in the last 3 years has still been anemic. It's been just above 4 million when it should be above 5 million. So we have 3 million homes or transactions that are pent-up demand.
And we bring you on, you come on, we always talk about this. Is that really going to get unlocked? I would imagine you've got to get a lower mortgage rate than 7% to truly believe that you're going to start to address that shortfall, so to speak.
Look, the number that we want is the same number that we wanted, last time we spoke, which is below 6. Give me 5.999 for not a day, but for a couple months.
He's right on target. Honestly, when rates hit 5.99, I couldn't hire enough people to staff up the place. So now rates took a spike, and now volume's a little bit lower, but things will turn around. So let's keep listening to him. He's pretty optimistic about 2025,
and we will be very close to mid-cycle. But we're at 7, and the 10-year is higher than we expected it to be at this point in time. However, there is a positive sign based on history, which is the year following 10 of the last 11 presidential elections. Transaction volume and prices increased, which reflects that people tend to hold off those purchases during the presidential election year.
You're sounding a little bullish. I've spoken to executives at Home Depot and Lowe's in probably over the past week to 10 days. They both think that housing turnover has likely bottomed. Do you?
Yeah, I think that we can't go much lower.
Can't go much worse is what that's what I'm trying to say.
There's no sign in recent history or data in recent history of going much below 4 million, and we've been at that level now for the last 2 years. And so I don't think it can go lower, and I think there are a lot of reasons we go higher. Year after the presidential election, mortgage rate stability, pent-up demand of those 3 million homes or transactions that should have happened that did not happen, and you can only hold back life events for so long.
And it's below that 6% rate that's really going to be the catalyst.
Below 6%, and we will be back in a normal market.
How about areas of the country where you think inventory can continue to build?
So inventory is building pretty much across the country. In every state, inventory is up year over year. We're up 20% year over year across the country. Again, but we need to grow another 30% to get back to pre-pandemic levels. I'd say the hottest markets, quite frankly, are the luxury markets. As rates increase, it doesn't really hurt luxury buyers who don't use mortgages, and they actually benefit from because they're recipients of interest income and they're not paying it in their mortgage.
Right. What's the percentage of first time? Is it 24, somewhere in there?
So first-time buyers there's a dramatic decrease in first-time buyers. The average age of the buyer today is 40 when it used to be in the 20s.
Wow.
Yeah, and so first-time buyers are getting hit because of affordability. And the affordability is an issue because there's not enough inventory.
Right. Are you confident that is also troughing, that percentage?
Well, we need more inventory in the country. It's been a talk of the presidential candidates, of course, the President-elect Trump. We at Compass, we've launched new products to help build more inventory in the country. Compass Coming Soon, Compass Private Exclusives, and Compass Make Me Sell program. What they're doing is they take away the risk to list. This is what I mean specifically. There are hundreds of thousands of people that would list their home if there were no days on market or price drop history. Think about people that would want to sell in the spring but don't want to list now because they don't want to accrue extended days on market. All of these products that we just mentioned, they have no days on market, no price drop history, no negative insights of any kind, and we're seeing that bring more inventory to our different markets.
Oh, that's interesting.
And Robert, finally, how are you guys navigating that, I don't know, deregulation of broker fees, if I could call it that? I mean, what's really going on in your industry now?
So what he's talking about right now is there is a settlement from it's called NARS, the National Association of Realtors. And there was a lawsuit, if you're not familiar with it, of where now if you're buying a house, I'll just put it out here, and I get a lot of complaints down below. But now what happened in the past is when you were buying your first house, you would basically work with a realtor and it would cost you nothing out of your pocket. But what would happen is the seller, whoever's selling the property, compensates their realtor, and then their realtor splits usually half their fee with the person who's buying your property, their agent. What turned around this year was they're like, no, you can't do that anymore. If you're buying a house, you have to contract with a realtor and you have to pay the realtor. And then the person selling the house, they have to get a realtor and then compensate the realtor as well. So that's what he's talking about in this. So I'm interested to see what he says on this part of it.
So pleased to say that of all the reports that are out there, and there are multiple different reports, that no one is saying that there's a significant change in commissions in any way. And so we're moving through, we're working with our agents to make sure that they have the best advice possible to give to their clients, but we are not seeing a negative impact.
All right. Robert, thank you.
Thank you.
Robert Refkin.
And we're seeing the same thing here. There's a lot of first-time homebuyers. What they're doing is they're going out to the selling agent and saying, my borrower has enough for a down payment, but they can't pay closing costs. Can you help us with costs? And they're still negotiating these things behind the scenes. So what's going to help a lot right now with home affordability, and this is a kind of a roundabout way to take it, right through here. I mean, there's people, if you have money right now, you're making a lot of money because most of the indices that we're seeing right through here, the Dow Jones and everything, they're up probably 20%, so far this year. If you're into cryptocurrency, this thing almost, it's about $100,000. This was, 30 or 40 at the beginning of the year. So this almost doubled or tripled. So there's a lot of money being made out there for the haves. And then what I'm trying to do here is teach the have-nots. How do you invest in this stuff? And I apologize about we didn't have Stock Talk Tuesday this week. We were still in the process of moving our office. It was a little more daunting than I expected. So I apologize to anybody out there that's been trying to reach us, email us. We should be back in full force by Monday, but it was a 2-week move that was really kind of a little bit hectic. So let's get over to the CME Fed Watch tool. This is what we watch every day to see what the projections are for the Fed cutting rates. And it's getting down closer to a 50-50 chance that they might not cut at the next meeting. So we'll see how that comes along as the date gets a little bit closer. But here's a tool that I want people to use. If you're out there looking to buy that first house, please go to Altos Research. Okay. Just put your fingers in your ear when you start hearing housing crashes and things like that. You need to be focused in on the area that you're looking into buying. Okay. So what I want you to do is go to altosresearch.com. And what you're going to do is scroll down. You're going to hit products, market reports. You're going to go down here, run a report. And here's what you're going to get. I just plugged in a zip code in the Chicagoland area and it tells us all this stuff. So I won't go through it in details, but it tells you the median home price, median price of new listings. It goes down to even the square foot per cost per square foot. And then it gives you the price history in your area, in your zip code. All the way down to your zip code, it's going to tell you exactly what's going on with housing there how many homes are entering the market, how many of them are getting gobbled up quickly. So I have the link down below for this as well down through there. So I also will be posting every day my closing bell video. I will be posting the live newsletter that we started creating, and it just basically recaps the day for you right through here. What happened is you go down through here, it just gives you throughout the day what happened, a quick little video to explain all our charting systems and everything else. And then it goes down through here and tells you the what economic data came out for the day, the rest of the week, and there's a whole bunch of other information down there. So I hope you take use of these newsletters. It will be down below in the description. So now off to who I am. My name is Dan Frio. I do this report every day in the morning. So let me say it again because I was away from my mic. My name is Dan Frio. I'm actually a mortgage loan officer. That's all I do. That's my living. I do this just to help you guys understand the market. I do write loans every day, and that's my goal, and that's my hope, and I'd love to work with you directly. I'm not just a YouTuber out there telling you, oh, here's what the market's doing. I'm actually involved in the process. So if you'd like to work with me personally or one of my teammates, please reach out to us. You can go to therateupdate.com. Here's our website. Guys, there's only 3 people that's going to answer the phone, so you don't have to worry about calling a call center, and all of us have over 20 years experience. We'd love to help you. And it doesn't matter where in the country you live. We're licensed in all 50 states as well as Puerto Rico. We'd love to help. So visit us at therateupdate.com. There's a bunch of different tabs that we just created up top. We keep revamping this on a monthly basis. If you want to put in an application, you can do so right there. Just click it and you're on your way. If you want to find some grants in your area, check out right through here. There's grants on a national basis, and if you live in the Chicagoland area, there's special loans or programs there as well. Then you can go to LE Review. What LE Review does is if you already have your loan locked in, you can upload your loan estimate into here, and we're going to compare it with over about 50 different lenders to see if what you're getting is actually the best in the market at that time. So that's what we're going to do there. And then we just added this feature. It's a one-on-one consultation call. You're going to click it. It's going to send you to our bookings page, and then you can choose which person you want to speak to and then register and click in and schedule an appointment with that person at that time. And there's a whole bunch of mortgage calculators and everything else. So that's our website. If you want to reach out to us directly by phone or email, you can do that as well. Just scroll down to the bottom of my website, and there it is. Our 800 number is 844-775-5626, or you can reach me personally at dan@therateupdate.com. So thanks so much for watching, guys. God bless. Have a fantastic evening. It's snowing here in Chicago, so if you're hitting some snow, be careful on your way home. Take care. See you tomorrow. Bye-bye.